Hey Realtor friends, Brendan McKay, McKay Mortgage, 5 minutes or less, here to talk to you today about bridge loans. Bridge loans is an absolutely awesome product. It can help you serve people who have a lot of money tied up in the house that they're living in right now, and they don't want to sell it before buying the new house. You sure as heck aren't doing a home sale contingency. And it helps avoid just putting as little down on the new house as possible, which makes the offer look weak, yada yada. And for all those reasons, plus keep in mind the fact that these buyers that we're talking about, as soon as they buy the new house, they're also going to be sellers. So these are absolutely clients that you want to be serving on as high a level as possible, and a bridge loan is a really great way to achieve that. So first, what is a bridge loan? A bridge loan, it's very appropriately named. It literally bridges the equity from their old house to the new house. And here's how it works on a high level. So it really, you go along like normal. You get them pre-approved like normal. You go under contract like normal. They go to closing, and when they go to closing, not only does the new mortgage fund on the new house, but the bridge loan funds as well. The proceeds on the bridge loan are sent directly to the settlement company and used as a down payment for the new house, okay? So then they own the new house, and they have 3 loans at that point. They have the new mortgage on the new house, the old mortgage on the old house, and then they have the bridge loan, okay? But as soon as they sell the old house, the bridge loan is paid off and the old mortgage is paid off, and they just have the new mortgage on the new house, and they go along their merry way, which is going to be a very short period of time in this market, you know, anywhere from a couple weeks to a couple months. So not a long period of time that they're under that kind of constraints. All right, let's make things a little bit more tangible here. So first of all, there are different bridge loan products out there on the market. It's not saturated. A lot of places are not able to offer them, but they don't all work the same. The one we're going to be talking about today is the one that McKay Mortgage uses very effectively. We think it's a great product. So let's say the client, their old house is worth $500,000. They can borrow up to 90% of the value on that house minus their current mortgage. Okay, so if it's worth $500,000 times 0.9, that's $450. And let's say they owe $300,000 on their current mortgage. You subtract $300,000. That means they're eligible for a bridge loan of $150,000 for the down payment on the new house. Okay, now let's take a live example of somebody I'm helping work with right now. Their current house is worth $400,000, okay? They owe $220,000 on it. So that means that they're eligible for a bridge loan of $140,000, okay? The interest rate is 5.5% in this scenario. Here are the closing costs. They're about $1,000. In some jurisdictions, they can be a little bit higher because this is a refinance at the end of the day, but it's not going to be too much more. So they have $140,000. There are the closing costs. Now let's take a look here. So this is just to show kind of a side by side. This is saying, what if they didn't leverage a bridge loan and did 5% down, kind of what it would look like, just to have something to compare it to. And here it is with a bridge loan over here, okay? So draw your eyes to a couple things. First, they're able to do 20% down, which is sweet. 5.25%, and not only makes the offer look stronger, maybe you even get an appraisal waiver on the new offer where you would not at 5% down. Principal and interest, taxes, insurance. Here's the bridge loan payment right here, okay? $642. So their payment is going to be $39.42, but as soon as this is paid off, it goes down to $3,300. Down payment, closing costs, escrows for the new mortgage. Here is the bridge loan of $140,000. They're able to do 20% down with bringing $58 to closing. Pretty awesome, okay? So that's what it looks like right there. A couple more kind of granular details on it. The bridge loan is a 6-month loan. You can extend it for another 6 months for a cost of $2,000. Not what you want to do. This is very much a short-term loan. The payment is interest only, which is really helpful, right? Because when they have the bridge loan out, they're going to have 3 mortgages out, and money is going to be a little bit tight. So having an interest-only option is obviously a big deal. And then furthermore, the interest rate is 5.5% if they're borrowing up to 90% combined loan to value. On the bridge loan. If they're only going to 80% or less, it's 4.5%. There's a cap of $250,000 for the bridge loan funds. We have gotten exceptions to that in the past. But that really covers the nuts and bolts. If you have any questions whatsoever on how the bridge loan works or anything like that, feel free to ask, and have a good one. All right, y'all.